Can I defer capital gains tax on the sale of highly appreciated cryptocurrency? The answer is yes. Using a deferred sales trust, you can now transfer your coins to a deferred sales trust in exchange for what's called a promissory note to pay you over time. It's kind of like an IRA, it's kind of like a 401k, in that if you do it in the right order, you can defer all of the capital gains tax. The big challenge with most of my clients before they find this is they feel trapped to sell their Bitcoin, their Ethereum, their XRP because of the large capital gains tax. Now, if you've owned cryptocurrency for more than a year, you have what's called a long-term capital gains tax rate, and you want to be aware of what state you live in and perhaps even what capital gains tax you're going to pay. I want to tell you about a recent story quickly of a client who bought Ethereum. Now, they worked in the Silicon Valley for 20 years, and they're looking at a very multi-million-dollar gain on the sale of their cryptocurrency. They were able to use the Deferred Sales Trust to defer all of that gain, and what was so cool about that is they were able to actually now retire from their day job, and they're going to start their own business and invest in some real estate, also into some more diversified investment grade securities, all tax deferred using the Deferred Sales Trust. I want to teach you all about this. In fact, I have a mastermind every Friday at 10 a.m. Pacific Standard Time that you can attend at no cost, and you can learn about the Deferred Sales Trust. We want to demystify what this is, how it's legal, how it works, so that you can create and preserve more wealth or help your clients do the same. You can go to capitalgainstaxsolutions.com to register for free, and also download my free ebook, Selling Real Estate, a business, or cryptocurrency smarter. Again, go to capitalgainstaxsolutions.com. Thanks so much for watching this video, and I look forward to connecting with you real soon.
All right, everybody. Thanks so much for being here again. I am happy to and excited to be able to talk with and educate people on the Deferred Sales Trust, as well as bring in some amazing experts to do the same, to demystify everything about the Deferred Sales Trust. For those who don't know me, my name is Brett Swarts. I'm founder of Capital Gains Tax Solutions, and where we help people escape feeling trapped by capital gains tax, especially cryptocurrency right now, be able to sell high, diversify, all tax deferred, so you can create and preserve more wealth, or help your clients or those you serve do the same. Part of what we cover here is kind of three things: the vision of why we're here, and then two, a deal story or two, and then some frequently asked questions that you, the audience, and anyone who's attending our mastermind can ask, and we can answer it live, including bringing on your CPAs, bringing on financial advisors, bringing on commercial real estate or crypto experts to make sure that you never have to feel trapped by capital gains tax ever again. I'm happy to be joined by my co-hosts and business partners, Jake Muller and Pierce York. We'll start with Mr. Jake Muller because he's looking fresh today. He's looking clean. He's got a new setup. He used to have great hair, and now he might have the most interesting hair in the world. Like, it's just so perfect. Jake Muller, how are you doing today?
My goodness. Do I need to do this? Just one of these, right? Anyway.
Jake, why are we here? What are we doing? Well, who's Jake Muller, by the way, real quick?
My goodness. Well, he's a guy with great hair. So we're here today because we help people, other professionals and their clients, take advantage of some phenomenal opportunities. Should they be eligible? Should they have an eligible transaction to defer capital gains rather than incurring it now and continue to reinvest the bulk or the gross of the sales proceeds of an otherwise taxable transaction? At the end of the day, so Brett and I, and in kind of other roles that I participate in, we have taught CPAs, we have taught financial advisors, sometimes even attorneys, various strategies that help them decrease or otherwise shift what would normally be taxable income, find exemptions, or continue to build assets in their overall net worth while getting deductions. Now, with the Deferred Sales Trust, should you normally have a capital gains type situation or scenario or a transaction that would incur capital gains, whether it's receiving stock options, selling cryptocurrency, selling real estate, we're able to mitigate those tax ramifications and defer them into the future while allowing you, if your purpose is reinvestment, to take the bulk rather than having to sell something and then shrink it down because of taxes to then reinvest. We're able to reinvest the bulk minus attorney fees rather than minus taxes, which then allows your reinvestment to go a lot farther and allow you to snowball your overall portfolio or your overall net worth going forward.
Fantastic, Jake. And Pierce, talk about who you are, your focus, and also talk about how the podcast is going. He's been taking over some of the show, some of the lift from the guests that we bring on. And for those who don't know, we run the Capital Gains Tax Solutions podcast, and we have some weekly guests, some people, amazing people like Kevin Harrington from Shark Tank, Neil Bala, who's an expert in multifamily, Michael Blanc, Kevin Bupp, and some others that are in the insurance world, financial advising world. So Pierce, take it away on who you are and your experience with the Deferred Sales Trust so far, and some of the folks you've been interviewing.
Yeah, absolutely. So I'm a luxury realtor out here in Newport Beach, focusing on helping those primary homeowners with really big capital gains tax problems and leveraging the Deferred Sales Trust to help them defer the tax instead of give it to Uncle Sam. The podcast is going really good. I'm learning how to kind of like shrink it back a little bit because I get a little excited talking to people too much sometimes. So, but phenomenal guests, tons of great content coming out of there. So be sure to check that out. Rate, review, subscribe to the YouTube channel.
Fantastic. All right. So let's move to the second part of what we're talking about here, which is the deal close story of the week. And we want to always bring this to the practical level, right? Because the biggest thing with the Deferred Sales Trust is, hey, it's too good to be true. Can it work for me? Why doesn't my CPA know about it? How do we know it's legal? And what are the practical applications? And Jake did mention in the beginning, should you qualify? We'll just start right there. Who is this for? Anyone who has a highly appreciated asset of really any kind. Again, cryptocurrency, Bitcoin, Ethereum. We're working on some NFTs right now. Real estate, primary homes. That's subject to at least $1 million of capital gain and at least $1 million net proceeds. And so as long as you hit those two parameters, this mastermind is for you. Now you might say, well, I have a few coins, Brett, different coins. And these coins are, some's at 200, one's at 500, one's at 100 in gain. And all of it collectively adds up to $1 million. In that scenario, we can work with those, but we need to make sure we set up it properly beforehand. But generally speaking, everybody else, we want at least a $1 million net proceeds, $1 million gain, okay, in order to make this thing work financially for you and also make sense practically for us in the legal team. Part of our role here at Capital Gains Tax Solutions is becoming the exclusive trustee. By the way, Jake Muller's role is a financial advisor, and the other role is the tax attorney CPA, who are our business partners who set up and execute on the legal portion of the trust, just so you know those roles as well. And so I want to talk about a deal of which that just closed, and this particular client, they were faced with the decision of deferring tax on the sale of their business. This is a dental practice that they had for about 25 years, and they're faced with a huge capital gains tax. In fact, their basis is zero. And they're looking at, hey, how do we make sense of this tax and also retire? So they weren't in the cryptocurrency world, but they're more in the real estate, business world. That's in traditional investments. And they're older, they're baby boomers, and they're looking at huge tax, but they're also looking at a way to exit and move into their next phase of their life, which is retirement, enjoying their wealth. And so they learn about the Deferred Sales Trust. Like most folks, they're cautious and concerned about this new strategy that they've never heard of and their CPA hadn't told them about. But yet they're optimistic that if it has the track record, which it does, and they can speak with the banks and our clients and get comfortable with it, then they can have an extra about 40% more to live off of, right? Pre-taxed, kind of like going into an IRA or a 401k. Is what the Deferred Sales Trust does, except it is for highly appreciated assets. And so we were able to execute, close on the trust, and it was probably about a 4-month period from the time they started talking with us and the time their actual deal closed. And so that is one of the best things about why we're here is we want to pre-plan the exit before the deal actually closes or until we're up against the wire. The wire being, hey, we're closing in a few days. And we've gotten calls like that, and it's like a fire drill. And what we found is it's not easy for those who are looking at this for the first time to make a decision about something they never heard about, all right away while it's maybe the biggest deal they've ever done. So this is part of how we're trying to educate everybody on the Deferred Sales Trust. We're also coming out with the book, by the way, and I'm excited to talk about that. It's called Building a Tax-Deferred Exit Strategy, the proven playbook for selling any type of highly appreciated asset for yourself or for your clients. And I'm excited to also mention that Jake Muller, he is in the process of finalizing his chapter. His chapter is going to be something along the lines of Deferred Sales Trust Made Simple. Part of why I love Jake is because he can think in a way and break things down in a very succinct, concise way. So that's the Deal Story Close of the Week. That's the plug for the book. Jake, do you want to pull anything out of that deal story? And then we'll talk about some of the Ethereum and Bitcoin deals we've closed as well for those who are attending and wanting to learn more about that.
So sometimes clients come to the table, Brett, and they ask, hey, what should I do? It's like the first question. What should I invest in? Or what new strategy do you have? And that's not the approach we take. Again, first and foremost, are you eligible for a deferred sales trust? That's what all of this is about. But if we pull things way back, we have to know what the client's objective is. So, I mean, is your objective to take the proceeds of some sales transaction and go buy a nice home to live in? Even if you have an eligible transaction, your purpose is not to reinvest, and so the deferred sales trust might not be the best thing for you, right? What we need to really dial in on is what the client's objectives are. And when is that going to be? A lot of financial advisors talk about time horizon, but the roots of it are, how soon are you going to need the money and how much of the money, and do you have enough right now? If not, we need to grow it, etc. And so one of the most important things that the Deferred Sales Trust does for people that time and time again, I reiterate, is that it gives control over timing over to the client. Control over timing of when to take the money personally, when to take contractual receipt, control over when to incur those taxes. It allows them to diversify. Perhaps what they're invested in right now, because it's a stock option, it needs to be exercised. Because it's real estate and the market's high, it's time to sell. But the asset it should go into might need to be different. That is the other thing that the Deferred Sales Trust allows us to do. It allows us to reinvest into something that it wasn't prior. We don't have to follow like-kind rules or any of that other thing. And so based on the deal story of the week, I guess what I'm getting back to is that they had specific goals and objectives of what they wanted to invest in the future going forward. And we were able to accomplish those because of the flexibility of the Deferred Sales Trust, which is the magic of what's going on here on the Deferred Sales Trust call.
Excellent. I also want to mention too, for a couple crypto deals, and one of the frequently asked questions I want to tease here, we're gonna answer: can I sell high and invest back into crypto all tax deferred? In other words, can I play the market? Can I go high and go back low? Because there's a lot of booms and busts, right, with different coins and different market cycles with anything in particular, but more so in particular for crypto, they tend to be higher, one way or the other quickly, right? And so short answer is yes. I'm going to walk you through that here later on. So I want to talk about so far the 3 that have closed, okay? Quickly, for those who are turning for the first time, the first one was an Ethereum / Bitcoin, about 90% Ethereum, 10% Bitcoin, for a client. His name is Peter. In fact, we have an entire blog post. If you go to capitalgainstaxsolutions.com, you search blogs, you can watch his whole story or hear his whole story. He doesn't give his last name. We keep that confidential, but he's working in the Silicon Valley for 20 years. Well, he was. Now he's retired, thankfully, because he invested in Ethereum at a very, very early time. In fact, he put about $100,000 or so in Bitcoin and Ethereum, and he saw the values jump up to 13 million. Right? Now, in between that, it went to 7, and it went to like next to $1 million, and then it went to 10, and then it went to 13, and then it went to 6, and it went back to 13. It was all kind of this wild roller coaster ride. And for him, he was okay with it because he understood at the essence of what the as much as he could as a technologist for 20 years in Silicon Valley. He actually worked for Ripple, for those who are familiar with XRP. So he's very, very close to the pulse of a lot of cryptocurrency in Silicon Valley. So he was okay with the swings because he thought, hey, this thing's going to come back. However, his wife was not as familiar. She was an attorney and wasn't in the technology world. She's kind of like the polar opposite personality type. And she's going, let's get out at 6 million, right? What are we waiting for? Let's get out at 10. And this became the conversation for multiple years. And basically what they landed on was, well, if we can defer the capital gains tax, it's kind of the compromise between the two, right? And so that's what happened. They found us with the Deferred Sales Trust, and they said, okay, so at least we can exit, defer. Also, what helped Peter, I think, make the decision as well was that he never had to work again for a W-2 employer and build someone else's dream. Like literally this meant if he made this decision, it can replace his income and his wife's income, and they both would never have to work or work less, right? That's really the goal, not to fully retire, but only work when they kind of want it to work. And this is what the DST allowed them to do, and also helped them to bridge the gap between her wanting to sell everything right now because the whole thing's going to crash, and him wanting to hold because the future of Ethereum, but also in the meantime, travel with their family, retire. You know, he's also from overseas. He kind of has dual citizenship, so he's got this thing going on there. So I say all of that because that's what is possible. That's what we've done, which led to the second transaction. This was for somebody who was selling her Ethereum. Oh, I'm sorry, Bitcoin, not Ethereum. In fact, Bitcoin was the only thing she invested in. And she's also in the Silicon Valley. And she bought it for $50,000 and it went to $50 million. Okay. And so she never sold. And she's like, I'm not going to sell until I have an exit plan or have a business plan with the money, which Jake's kind of referred to before. Once she had that inspiration to start a startup company and also be able to retire from working for a big Silicon Valley company, those things came together, and the DST was that tool where she didn't have to get hammered with the tax. She could defer the tax. So we did $5 million, and we're doing another $1.3 million here shortly, and that has put part of that's going to be invested with Jake Muller, who's on here right now. The other part of it's for a startup company. And so those two, which led to the third one, which goes back to Peter. And Peter liked the DST so much that he did another $2.5 million after Ethereum hit another all-time high and this is over the last 120 days or so. We're a little bit lower right now. And so now we're about 12.5 million of AUM of cryptocurrency deals, working on an NFT deal that's worth about 200 million. And we're working on multiple smaller ones between 1 to 3, a couple like at around the $10 million range. And so it's possible, it's here, we've done it. If you're wondering about the Deferred Sales Trust legal track record, I'm going to pass that over to Pierce and have him talk a little bit about that. So Pierce, if you're in the cryptocurrency world and you're wondering about legal track record, can you tell us a little bit about that and help people to get comfortable with what the DST has done in the past?
Yeah, so the DST, one of the greatest things about the DST is its track record. It's one of the most like transparent and legal options that's out there. We're batting 1,000. Those are 12 random audits, all no change, no findings. It's like a no change, no findings is amazing. I didn't realize how amazing that was until Jake kind of like broke that down for me. You know, when he equated it to like, that's like a home inspector coming into your home and literally finding nothing wrong. Like, when's the last time? Like, we had a new build and we had 5 things that were wrong. So, I mean, that's absolutely amazing that there's no changes, no findings. And then there's 2 formal audits. Again, no changes, no findings. And then an audit by FINRA. So there's a lot of precedent. There's 3,000 cases that have closed, over 3,000 cases. It's been around for 25 years. And one of the things that we do is we don't try and hide anything. It's all out on the table. It's all open. This is exactly what's going on. It's a very transparent process. And so, all those people are like, oh, well, is it legal? And yeah, it absolutely is.
Excellent, Pierce. Thank you so much. Jake, anything to add to what I said or what Pierce just said?
So I had the privilege of participating with a large accounting coaching firm across the country with over 10,000 accounting firm owners. And I was assigned to the top 400, where I had to vet a number of different strategies outside of everything that is, deferred sales trust. And, 19 out of 20 that would come across were kind of hokey or were kind of, could be a scam, or there just wasn't any precedence. There wasn't any history. And so some of the things that I would add to this is the fact that there is a history. This is over 25 years going. Everything that Pierce said, and the fact that it's been tested. That's one of the things we look for. That's one of our check boxes. is this a good strategy to recommend to a large group of CPA firm owners? And yes, there are a number of different precedences. Usually we have to analyze, well, when was it disallowed? When was it allowed? And how to do it right. We don't have to do that with the Deferred Sales Trust. The phenomenal thing here is the fact that it's been through the ringer, it's been through the gauntlet of the IRS, and they have tested it and tested it and tested it. And out of, after thousands of trusts, it's come through with 100% track record. I can only think of 2 strategies out of a list of over 423 strategies that we have for clients. I can only think of 2 that are like that. And the Deferred Sales Trust is one of those. So it's a big deal. And that's why we're here today. And that's why we put our full faith behind it, because it definitely, if a client is eligible and they have a continual investment purpose mentality in mind, and they want to snowball effect their overall portfolio of investments, this is a phenomenal tool that will help them do that.
Excellent. Fantastic. So now let's dive into, can I invest back into crypto low? This is actually one of the questions we had from a client that we've been working with for a couple months now. And she's considering selling her crypto and want to make sure that people understand this. And so it's like with anything, spaced repetition with communication, we can start to sink in, right? And so you can sell high and you can buy low of real estate, of crypto, of stocks, bonds, mutual funds. You can dollar cost average. In other words, there's no timing restrictions with the Deferred Sales Trust compared to something like a 1031 exchange, which has a 45-day window to identify and 180 days to close, which can create a sense of urgency and perhaps you're overpaying. Also, equal or greater value must be purchased. Equal or greater value of debt must be replaced. Typically means you're trading all of your equity into one other deal, one other location. You're not diversified. You're not liquid. That's why we call that the 1031 exchange blockbuster method. But by the way, if you're selling cryptocurrency, 1031 doesn't even apply for that anyways. 1031 only applies for investment real estate, but just as a comparison, that is a very restrictive model, right? Versus like a Netflix Deferred Sales Trust, where there's literally no timing restrictions. You can dollar cost average. So much so, we had clients during COVID-19, when everything hit the fan, they closed their deal. We saved a couple 1031 exchanges, closed a few deals, and the funds sat at the bank for months, partly because they didn't want to invest into real estate and they weren't comfortable going into securities given the market conditions. And so that's part of what happens with the Deferred Sales Trust. You must approve of all investments. Funds do not move without your approval. And you are like the CEO of this business trust. Now, you are lending the funds to the trust if you're wondering how this whole thing works and how can it be tax deferred, because you don't own the trust. You're lending the funds to the trust and you're the secured lender. You're the bank. Okay. And you slowly will pay tax as you receive payments back from the trust or the principal amount. But in the meantime, these funds that are there can be invested back into real estate. And I'll give you an example of that one. We had a client who closed a deal in Alabama, $2.6 million business sale, about $600,000 of tax liability or so. And he had zero basis. And part of his next venture, he's in his mid 40s, was to invest and build multifamily complexes with the money. And so what did he do? He deferred the tax and he was able to, all tax deferred, partner with the trust to build multifamily complexes. So that began the thought of, okay, well, if you can do that and you can do businesses, why not go back into cryptocurrency? And the answer is, can you do that? Yes, you can. You can partner with the trust. And especially if you are a cryptocurrency expert, right? That's how you made your wealth. You are able to use the funds that you would have paid of tax, a portion of the funds. We can't over concentrate. That's something to understand. It's not as if you sell for, 5 million and you're going to put all 5 million back into cryptocurrency. It's more like a percentage of the trust based upon your risk tolerance, because the trust doesn't need to pay you that 5 million back to the best of its ability based upon investments and working with financial planners and experts like Jake Muller, going into real estate deals and expertise there with myself and helping you with that. But that being said, you're an expert in crypto. And so we don't want to take that away. Just like our client, Jake and I's client, who is an expert in technology and had the $50,000 Bitcoin go to 50 million and has done up 5 million so far. She's an expert in building software and coding and all of those things. So a big percentage of that 5 million is part of the startup company that she's building with her college roommate, with a partner, which is totally cool, right? So the same thing can be said for going back into cryptocurrency. And so back to putting this all full circle, the client we're talking about today, she's like, oh, now I get what you're saying. Potential client, she's not a client yet. I get what you're saying. I can sell high and I don't have to do it. I don't have to invest all at once back into crypto or real estate or stock market, but I can keep it on the sidelines and then I can invest when the market's low. And the answer is yes. So that's exactly what you can do. Jake, any thoughts on that? Or actually, I'm going to open it up now for questions now. Any questions? We got Clint, we got Scott, we've got Vijay, we've got Angie. Anyone have any questions about anything that's been said so far? Or any thoughts on or comments on what we're talking about here?
Yeah, I had a quick question. It just came to mind. Ended up having a client that needs. He's almost in a bind, I guess, for 1031. What is the commission structure for the DST for brokers?
Are you talking specifically to the real estate side?
Yes.
You want to answer that, Jake? Or you want me to answer it?
Go ahead, Brett.
Okay, sure. So yeah, we do work with those who bring their actual clients, right, and have that relationship with, and who are going to help to, move the DST along. We do pay referral fees. Okay, so happy to do that. I'll talk about the fees real fast on the deferred sales trust, just in general, and then we can talk offline, Vijay, on our referral fees. But it's about 1.5% of the gross sales price is a one-time fee to the tax attorney. So let's just say it was $1 million deal. The tax attorneys are going to get a $15,000 fee. By the way, that covers lifetime audit defense, which is really important. If you get approached with anybody who's providing any kind of tax deferral strategy, you want to ask them obviously what their track record is, what they face with the IRS, but also what happens if you actually get audited and who's going to pay for all that? And the answer with the deferred sales trust is there's lifetime audit, which is a part of that one-time fee of 1.5% of the gross sales price. So that's that fee, okay? The ongoing fees, like Jake Miller and myself as the trustee, Jake Miller is the financial advisor, is somewhere around 1.85 to 2%, and it could be even a little bit lower depending on the AUM. So depending on how high and how much you manage the funds, and also depending on how and where the funds are invested at, okay? So our goal, though, is to net the client about 8% or 7% or 6%, depending on their risk tolerance, net of those recurring fees. So let's say it was 8 is the goal. We want to try to earn about 10 to net them about 8 over any 10-year period of time. Okay. Now, so the trust that's also why we have those minimums, right? Because the pain or the tax needs to be big enough in order for the to pay the fees. It makes sense and have a good ROI on this. Okay. So that's kind of the rough fees there. There's also tax return fees and a few others. However, if and when you go back into your own crypto deals and or other real estate deals, there's a way to get a majority of the upside, which is a proprietary protected way, which we can also show you to you offline. Happy to share that with you. So, but yeah, we do pay referral fees, and it is based upon the fees of the trustee, and we can talk about that offline. We got to be careful, right? It's not something where you're securities licensed, right? So you're not going to get paid by Jake Muller as a securities professional. But as a trustee, I am able to pay referral fees. I'm also a California real estate broker as well, FYI. But hopefully that answers the question, Vijay. I think so. I'm taking that as a yes. Anyone else right now? We got Scott, we got Helen, we got Angie.
Yeah. I'm sorry. Yeah, that took a while. Yeah, so that does answer, and I'll get with you on EXP, I guess, later, a chat.
Cool. Sounds good. Yeah, send me an email or send me a chat there on EXP. I'm with EXP Commercial. For those that don't know, I do multifamily brokerage as well. It's part of how I got started in the whole thing. But yeah, that'd be really great. So we got Mitch also on as well. Welcome, Mitch. Scott, looks like Scott has a question. Go, Scott.
No, I had a question and Jake answered it directly, so I appreciate the opportunity. But thank you.
Absolutely. We got Angie, we got Helen, we got Mitch, we got Leah. Leah, do you have any questions for you right now? She was off mute. Now she's back on mute. I'll take that as a no.
Yeah.
Brett.
I had a quick question. You already said it. How many transactions have been done so far? 3,000?
So there's been thousands and thousands and thousands. Okay. All right. So we'll leave it at that. There's been a lot of transactions done, at least 3,000, but estimates are also are higher than that. Okay. So, but yeah, at least 3,000. And it's over 25 years and billions under management. All right. Good question. Good question.
Hey, Brett, this is Clint. Can I ask a question?
Yeah. Go Clint.
Okay, so you're talking about this 8%. Is that a yearly thing? And then how do you get that 8%? Is it like a snapshot? So for instance, in crypto, if we invest back into crypto at one point, and then you're never going to time the top, you're never going to time the bottom just right?
Right.
And let's say the portfolio goes down just a little bit. So is it just like at the end of the year, you take a snapshot and do 8% off what the value of the whole trust is? How does that work?
Yeah, great question. So we want to separate what's owed back to you versus investment performance. And this is really key, right? What's owed back to you is set in stone. No changing that. It's like you bought a house for $1 million and you borrowed $800,000 at 3% from the bank, right? That's what you owe the bank, is that $800,000 at 3%. Your value of your house can drop to 800. Your value could go to 1.5. But what you owe the bank is that $800,000 at 3%. So in the trust scenario, what's owed to you, let's just say it's a $5 million crypto sale, Clint, right? What's owed to you is that $5 million at 8%. Now, the investment performance and where this thing is going can go to 6 million, can go to 4 million, can go to 8 million, can go to 9 million, can go to 10 million. I mean, can go all over, can go to zero. Now, the odds of that happening with the diversification and how we've done this are very low that it goes to zero. But that's also why we don't want to put too much into any over-concentrated single investment to only see it diminish. But let me also add to this. We don't have to necessarily hit 8% every year, right? Some years are going to be up, 8. Some years are going to be down 8, right? Some years are going to be up 5. Some years are going to be down 15. Some years are going to be up 20, right? I mean, these are things that we can't control. Now, we can absolutely diversify, and with Jake Muller as the financial advisor, and especially the stuff that he's working with, there's a lot of stuff that can be measured, and there's certain things that can be, more fixed instruments or safer. That's part of, again, why we love the diversification aspect of the Deferred Sales Trust. So what we say to a lot of crypto folks is like, hey, I mean, you might have 1, 5, 10, 15 million of crypto right now. We don't ask you to sell 100% of it all right now. You can start with, if you had 10 million of crypto, you can start with $1 million into the trust. You can even start with $500,000 if you wanted to go, if you didn't want to go quite the $1 million first, knowing that there's an opportunity to get to $1 million here in the short future. And dollar cost average out, as well as dollar cost average back into investments. And so also understand that it's a compounding 8%. So the moment the funds are in the trust, compounding, let's say it's $1 million at 8%, that's $80,000 a year. So 1 year later, ideally, Clint, it would be $1,080,000, right? Net of the fees. That would be perfect. But it would also be cool if we got 16%. And that next year we're covered, right? So it's dynamic. It's compounding, and it's still owing it to you. But even if it doesn't perform, that's okay. That's part of why you have this 10-year time horizon. Now, at the end of 10 years, you can also renew for 10 years and renew, pass it to your kids, keep it going. But let's imagine you go, well, after all of these, it's 10 years, Brett, we didn't get 8%. We only got 7. Well, that's pretty good, Clint, versus paying, let's say, on a $10 million sale, you're paying $2 or $3 million of tax. 7% on that is better than having paid that tax. Is that making sense, Clint? Or any questions there?
Yep.
Am you following me?
I got it. I was just, I figured that's how it was, but I've never heard you talk about it before. So.
Yeah, absolutely. Great question. Jake, do you want to add anything to that or edit that or subtract?
Yeah. So depending on the client, a lot of the way that we manage this going forward might be kind of new. It would be very similar to a corporate asset management account in the sense that there's going to be certain things that need to be paid. There's going to be distributions that you need or you want for personal reasons in the future. There's, if it's sizable enough, there's that required 8%, or maybe it's not required because it might be a smaller trust, whatever. That's why we have this kind of executive team that works with you. That's why Brett is the trustee, myself as the financial advisor. We kind of, try to compare that to you being the CEO. You're still the the visionary. It's based on your desires and wishes, what we do, everything else. But Brett's right there as the COO to execute, right? And I'm there as the CFO to provide some financial wherewithal on, things going forward so that what all your options are at any given time. And, at the end of the day, we're managing this kind of like a corporate asset management account where you have various goals and various things that you may need to move money in and out of as far as underlying investments, as well as money in and out of the trust. And we're here to help you with that.
How's that sound, Clint?
Awesome. Thank you.
Yeah, absolutely. Anyone else have any questions right now or thoughts? We have Scott, we have Mitch, we have Helen, Leah, Vijay, Angie. Yeah, Mitch, you have one? It looks like you're talking, Mitch, but I can't hear you, so you might have to switch your microphone.
How about this?
There you are.
So, quick question on: are you on deals that have been closed recently? Are you, because Sherwood's Bank is out of the picture? Are you using deposit account control agreements?
Yeah. So, deposit account control agreements, which are known as DACA, for those who don't know. It's a layer of security where a specialty depository group looks at and reviews documents that are physically signed. And so SunWest Bank is still our provider for anyone who wants to go into real estate or business deals or any other creative way to go into different deals. We can use them. If not, we go directly into like a TD Ameritrade or Charles Schwab. And so we completely just save on that expense. And so right now we have a digital signing process, which nothing moves without the digital signature of the note holder, right? Which is the client who sold the property or sold the cryptocurrency. So it's not something that SunWest Bank is handling on the DACA anymore as of right now. They are working on some other ones. And for the vast history of the Deferred Sales Trust, DACA has never been used. And it's very rare that it had been used in the past, except for really ultra high net worth clients that wanted that. And that's part of what came on. We were doing so many transactions and so much, and a lot of clients too didn't like the process of having to physically sign for all movement of funds. They wanted the digital version. And so as a way to bridge that, we lost the DACA, which saves the DST some money. And now we use DocuSign to do that, Mitch.
So as far as let's say we have a ultra high net worth seller who's concerned about defalcation or fraud, is it possible for them to have their CPA or their attorney be part of the security process along with you? Like, let's say they're concerned about you as the trustee. Can their CPA, can their attorney require that they be involved in any money being moved anywhere?
Yeah, we can get a second trustee, right? A co-trustee, as long as it's not a related party, and that's extra expense. And but absolutely, if they want that, we could accommodate that. Absolutely.
Okay.
I would say that most of the time, Mitchell, we add them as a view only, as a trusted advisor, so that they receive informationally everything ongoing, because there's already a dual process, a client signature and a trustee signature that is required for any movement of funds. So for regards and concerns over fraud, typically that's overcome with the dual signature process that's required for any movement. However, it is possible to add a second trustee as well. I would say that's a rare occasion that we are required by the client to do that.
Well, I've just got a prospect who's extremely hyper concerned about the possibility of fraud, just because he knows somebody who's been through the ringer of getting ripped off on a tens of millions of dollar transaction. And he said basically that if Brett is the trustee or whoever is the trustee wants to bad enough, they could steal the money. Not that would happen, but he's saying that is a possibility. And I'm just kind of wondering what kind of fail safes can we put into the wheels that make this turn to prevent anything like that from happening. How can we satisfy his concern of, again, defalcation or fraud?
Yeah. Well, and again, specifically to that client, absolutely, we can make whatever adjustments that are necessary. But a lot of times they need to get comfortable with Brett. And Brett has a number of clients that have given him permission to put him in touch with potential clients so that he can see that he's doing well with other clients of similar size, that, he's got a history of doing things accordingly and correct. But of course, there's always that concern in the future that, something in Brett's life might change, right? And so usually, again, just having somebody audit his every movement is sufficient by giving them view-only access. But of course, for an additional expense, you can add that other trustee, which isn't really a big concern usually for these ultra high net worth clients, as you mentioned. A lot of it just has to come through conversation and through the process with each individual client to find out what makes them comfortable.
Okay.
Yeah. And the other thing I do say too, Mitch, is the funds are like, you're a financial advisor and Jake's a financial advisor, right? And so if it's like we set up accounts that the funds are being paid back to the client, right? And so if I were to all of a sudden send a wire request for, let's say it's $10 million to send off to this new account, I think Jake would first call me right before he presses the button, or you would call me before you press the button, right? Two, you'd call the client and you say, hey, this 10 million, this they want to go off to this other bank account and not in your name. And, this seems a little odd. Did you request this? Yeah. Right? And then at that point I'd be in jail, right? For trying to steal money or whatever. Right. So that's also the other thing. It's not like I can just log in and just say, hey, Jake, 10 million out, and you guys aren't making the call or looking at it or talking to the note holder. In fact, the bank, even right now, they call me on wires that we're requesting. Right. They're also looking at, it's going to JP Morgan Chase. It's going to Charles Schwab, right? It's going to, the TD Ameritrade. It's the Wells Fargo. They see that. Yep. And sometimes we'll even call the note holder and say, hey, especially for big amounts, but they're verbally going over the phone for these things. So I don't necessarily see that the trustee adds an additional, I actually think it's actually an extra fail-safe, right? Because I'm looking over your shoulder too, right? I'm looking over Jake Miller's shoulder. Right. And then the client. So we got Campbell Law, and then we also have EPT. Right. And so we have a lot of parties looking over each other's shoulders, and we're also separate companies. So there's a lot of accountability, and we do that separately because of the nature of the trust. So hopefully that would help them feel more comfortable. But like Jake said, until they talk to the bank, talk to me, talk to clients, right? Talk to you. Like, are they a client of yours? This is the other thing we also say too, right? It's very difficult for somebody cold turkey to walk in with the Deferred Sales Trust, not knowing who you are or we are, and then their biggest transaction they've ever done, and entrust you with that, right? And so what we found is if you have that know, like, and trust already built, right, over time, and or clients with references that they can connect with that, then it's not you trying to convince them that, hey, we have integrity, we're not going to steal your money, right? It's, hey, we have processes and procedures in place to make sure that something like this doesn't happen. That make sense, Mitch?
Thanks.
Yeah. All right.
I did want to just kind of piggyback on that, because I was having a conversation with a gentleman earlier in the week who's worth a lot of money. He's his own tax attorney, does a lot of commercial deals and whatnot. And that was his big thing. He's like, if someone wanted to, they could just steal it. And he's like, it's happened before, not necessarily with the Deferred Sales Trust, but with other trusts. So I did want to ask, is there anything that's like separates the Deferred Sales Trust, like with the processes and all that kind of stuff, from other types of trusts that have been kind of defrauded or hacked?
First thing is he a real estate guy, Pierce?
Yeah.
And so ask him, where and how would you like to invest the funds is the first question. Do you think he'd invest it back into real estate mostly?
I mean, it just depends on, he's all over the place. It was more of just like, hey, these are my concerns with it.
Yeah. Okay. So imagine he was real estate. So first thing you say, let's practically talk about your $10 million sale, where the funds go. Step one, they go to SunWest Bank, Irvine, California. You can go meet with the bank. You can sit down. We sit down in their boardroom, meet the president of the bank. They're, $17, $18 billion bank, right? They're commercial real estate, entrepreneurial type of bank. So talk with them. First thing, B, the next day, up to 80% of the funds can go into an LLC in which he opens up the account at his own personal bank, as long as the funds are going to be invested in some kind of partnership business or real estate deal, of which he pushes the red button, right? So that's cool, right? So you say, okay, well, you would have paid $4 million in tax anyway. If you're really concerned about this fraud thing, okay, then let's line up a business deal. Let's line up a real estate deal. Let's line up something else where you can partner with the trust and you open up the account, right? And you're the managing member of that LLC. Like, that's totally fine. We do need to keep liquidity for the trust. So there will be, and that's where Jake Muller comes in or Mitch comes in, right? To be able to manage those funds, right? And then it's back to, it's on Mitch, right? It's on Jake Muller, right? It's not even just a trustee. So the other thing too is the funds are never commingled with other trust accounts. They're never in my personal account, right? So yeah, those are the things we have in place. And I'd also put it back on them, like, well, where are your funds now and how are they protected? Okay, let's mirror that somehow. Let's get you really comfortable there. So I think sometimes these are good questions. They just have to spend time with us, spend time with the bank, right, to get comfortable with those things. Does that make sense, Pierce?
Yeah. That whole concept makes sense, right? Like, obviously the know, like, and trust factor is probably the biggest. Excuse me. But I guess is there anything in particular that is like different with the deferred sales trust as opposed to other trusts? That does that make sense? Like, is there like one thing or two things? It's like, look, because of this reason, like it's exponentially harder to like defraud it, or is it just the know, like, and trust like aspect?
Jake, any thoughts on that? I don't really quite understand.
Yeah. So I think what Pierce is going after is, you've got a corporate vel and a business entity. You've got a C corporation, which is different than a disregarded or a pass-through entity, which could be sometimes, an S corp or an LLC, something of that nature. And, there are certain controls in place with various entities such as trusts, nonprofits, whatever. And it all has to, when it comes to fraud, Pierce, it all has to deal with the people. And yes, there might be some corporate vels, there might be some structures in place, but those can all be sabotaged, right? You can pierce the corporate vel, you can do things, mix and mingle funds, all that other stuff. With a little bit more often in the financial services industry, we talk a lot about money laundering. We talk a lot about early signs of detecting potential cases of, client behavior that is abnormal. A lot of it has to do with elderly abuse, somebody trying to take advantage of somebody who's older and they don't know what's going on. Mitch is shaking his head. When I say they don't know what's going on, they're susceptible to people that tell a good story and it's a good heartfelt cause, and please send me the money. I need it today. I need it tomorrow. I need it less, whatever. Right. And when it comes to something like this, dollar amounts that are much larger and everything else, just as Brett mentioned earlier on, hey, if Brett sends me a little email and it says transfer funds, and it's like, well, this is kind of odd because usually Brett has a lot of documentation. So by the way, Brett is a really good trustee out of a lot of different trustees. Like, things are quick, things are documented, things are taken care of appropriately. And it's like, if he just sends me an email, I'm going to think, oh, what's going on? Like, I'm going to call him first, because just an email without an explanation of what the use of the funds are for and everything else. I mean, Mitch is familiar with all the stuff that we have to document.
It's actually required. You can't accept any trade requests via email or letter. It has to be verbally verified. But I think, Pierce, what the big difference is that this is a third party trust. Meaning, if you set up a living trust for you and your family, you're the trustee, you're the grantor, you set it up, you're the trustee, you're the trustor, you're all entities to that trust. Here, as the seller, you would be the grantor, you're setting up this trust, but you're not the trustee.
Right.
Brett is the trustee. So you're handing that exposure over to a third party, which is Brett. And so you're putting the trust in him. That's I think maybe the answer to your question. I don't know.
Yeah, and by the way, we are also working on DACA as well, right? Another DACA account. So if somebody, again, if they want us to do these things, we will make it happen. We can hire DACA. It's just really expensive. Like we have one that's like wants $3,000 a year for it, and if it's a $50 million case or $100 million case or even whatever, it doesn't matter as long as the trust pays that that cost and the note holder is willing to accept that expense. We can set up deposit account control agreements where we're literally physically looking at documents that are signed, and the bank is actually, the bank is looking at it and they're saying, is that the same signature as this? And then also let's call them. Let's give them a call over the phone. Mr. Note Holder, I see your physical signature here for a $10 million transfer, a $5 million transfer, a $1 million transfer. Is that you? Yeah, that's me. I just signed that. Brett signed that too. Great. Now we're pressing the Brett button. So we can solve that. We just don't have that right now with SunWest Bank. We have just doing it through DocuSign, which is different. So yes, we can absolutely solve that. We can adjust. It's just going to cost a little bit more.
Yeah, I guess what prompted the question is when Mitch said like he has a client, right, who has a friend that got defrauded on 10 million bucks, right? And if you were to having that conversation with the guy, like, what is there anything that's like, well, that wouldn't happen in this particular case with the deferred sales trust because of the fact that we have 5 parties like looking over each other, checks and balances.
It's still people. The only thing that really changes is I'd ask him what happened there, right? Like literally what happened. Say, what happened? Somebody hacked my email and sent this email to this person and said to send the money, and they gave them different numbers. That's typically how this thing all goes down. I've never had that happen to any of our clients or myself. That's safe. But you'd have to figure out what went wrong. At some point, somebody did not follow protocol, and that was the breakdown. Whether that not be verbally confirming over the phone the account numbers, whether that be not be verbally confirming over the phone that the person actually requested that amount of money to be sent, right? Something broke down there, or whoever typed it in, right? That broke down, and the only way to fail safe those type of things is to have something like a deposit account control agreement where a bank is looking at it. But even then it's the bank person. The bank person has to review it, call. There's always a person that's going to have to verbally call and talk to somebody is the safest way I've seen that, unless the entire system gets hacked, which could happen. And then, Jake, you're holding at Charles Schwab, right? Could Charles Schwab get hacked and all the money go away?
Anything's possible, but very unlikely, right?
And actually, Charles Schwab is one of the most secure custodians in the country over Fidelity, over TD Ameritrade. Schwab is one of the most hyper-vigilant custodians and banks and brokerages, because they're all three in the industry. So
they also get 24/7 access to the funds online and the investments and the statements and all of those other things. So I don't, Pierce, I think to answer your question fully, there's nothing about the nature of the deferred sales trust that's going to make the transfer of the funds and fraud safer per se. I do think when you have 5 parties, I think you can make the argument versus one person, right?
Yep.
Like you have the note holder, you have the bank, you have Charles Schwab, you have Jake Muller, you have the trustee, you have estate planning team. You could even say 6 parties, right? You have all these people looking over each other's shoulder, right? The odds of somebody getting away with something are much lower, right? So I would actually say I think it's safer, right? To be honest, like you could say it's safer. And so I'd have to be in cahoots. Jake Muller have to be in cahoots, right? Potentially the bank, well, in that scenario, just have to be the financial advisor and the trustee, right? And we'd have to throw our life away to steal the money, right? So does that make sense, Jake or Pierce?
Yep.
All right. I think we banged that horse down, but that's a good question. It's a really important question. Who else has questions? We got Scott, we got Clint, we got Angie, we got Leo.
Is there a certain company who's is it just are you guys just doing the trust, or is there a business entity name?
Yeah, it's an exact brand new entity. Like you saw a new LLC, we're forming a new deferred sales trust. So it's a brand new EIN, and we name that. So, it could be Evergreen DST 2022. And that individual business trust, kind of like a C Corp, only does business with that family, that note holder, right? And that trustee, our company. So that's where it's exclusive. Does that make sense, Vijay?
Yeah. Who who like you guys are consultants, or you guys are
I'm the
managing?
trustee. I'm the actual trustee, if you're wondering. Jake is
Okay.
the actual financial advisor.
Okay.
Mitch is
So,
an actual
okay.
financial advisor.
Okay. So you guys, so there's no company. It's just
Yeah,
individual.
Capital Gains Tax Solutions. Yeah, that's our company.
Okay.
That's our company.
Okay. Yeah, that's what I was referring to. Thank you.
Okay. Simpler answer, I think, there. Yeah, for you. Sorry about that. Make it more complicated. All right. Leah, Angie, Scott.
Yeah,
Clint.
I'm finally able to take off mute. As you know, we have children, so it kind of gets a
Right.
little crazy.
All
I really
good.
wanted to be a part of this class, and this discussion, just to learn more. I'm more of a fly on the wall, probably every Friday. Want to be surrounded with these conversations more, looking into, more crypto. We've had crypto for about 4 years, but when I saw your presentation in regards to investing and deferment, I was really intrigued by it, and just want to, surround myself more with the conversations. This is the future. There's going to be a lot more happening with cryptocurrency, electronic funding, what else? Gosh, blockchain. So just want to try to involve myself more into it. So
Well,
I
Leo,
appreciate these
happy to
classes.
have you. Thank you much for sharing. Where are you located at?
I'm in Sacramento.
Oh, okay, cool. So yeah, that's right. And were you at the event
Yep.
yeah, okay, that's right. We
Yeah.
met in person. I'm not seeing your video, right? So I'm forgetting. Yeah. So
Right.
cool. Yeah,
Right.
yeah.
Like
Leah
I
and I
said,
went to
I'm being mom today, so I'm not very presentable, but I
Oh.
did want to get on this class.
Come as you are. It doesn't matter, right? Your expertise, whatever. But you can share your video, not share your video. It's all good. It's all cool. Very good. Well, thanks, Leah, for attending, and please come back. Please bring a friend. And I do agree,
Definitely.
it is the future on so many ways for blockchain and deals and real estate, and we want to be a part of that and build a community where people can sell real estate, sell crypto, sell currencies, sell financial securities, and defer the tax, and then make more sense of their wealth plan. That being said, we are out of time now. We're top of the hour. People probably have meetings here in a minute. So I'm going to go ahead and just do a quick wrap up here. Pierce, for people who want to get in touch with you, who might be selling a luxury home, where can they find you? And what's the best place for them to connect with you?
Yeah, you can go to my website, kingdomluxuryrealty.com. And there's my email and phone number and everything on there. So you guys you can catch me there.
Thank you. Jake, how about you? Jake Muller.
Yeah. So alphamarktax.com, ALPHAMARK tax.com. And there's a little booking tab there at the top, or you can call 1-800-773-1848.
Fantastic. How about you, Mitch? If Mitch is still there. Mitch might not be there. Mitch, are you there? He might be gone. So that's it for the day.
Mitch is muted.
Mitch.
800 way cool with a K.
Okay. And Mitch is out of Colorado. Jake is out of Utah. I'm in Sacramento. Pierce is out of Southern California. And I want to thank you for watching. As always, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy. And using a proven tax deferral strategy, such as the Deferred Sales Trust, we believe is the best way for you to defer or help your clients defer millions of dollars of capital gains tax so that they can create and preserve more wealth, or you can create and preserve more wealth. Thanks so much for watching. If we can help you in any way, go to capitalgainstaxsolutions.com. Download our free ebook, Selling Real Estate, Business, or Cryptocurrency Smarter. And it's like the 9 steps to really dig in on how to get the Deferred Sales Trust process going. If you have a deal that's live, $1 million net proceeds, $1 million gain, you can schedule a consultation with myself or one of my team members. We so appreciate everyone out there. Please rate, review, subscribe, wherever you might be consuming the content. Share this with somebody, invite someone to the Mastermind, and we hope to see you next week, 10 a.m. Pacific Standard Time, 1 p.m. Eastern Time, every week on the DST Cryptocurrency Mastermind. Thanks, everybody, and we will talk soon. Bye now.